Alright, so there are plethora of funds available in the market to invest your hard-earned money in, but how do you assess to the right portfolio, the right fund for your portfolio? What are the criteria that one should look at? So to help you navigate to this maze, today we have Anil Rego, founder and CEO Right Horizons with us, and also do not forget to send us your questions on our WhatsApp number, which is 86579745571. You can also email us your queries on the Money Show at etnow.tv. So Anil, hi, good evening and welcome to the Money Show. And let's get started with our viewer queries today. And the first question is coming up from Pratik. The kind of details Pratik has sent for his query: he has SBI S&P Index Fund, he has SBI Contra, he also has Nippon India Nifty Small Cap, he's got Motilal Oswal Mid Cap and Parag Parikh Flexi Cap. He wants you to review his fund selection, and because his aim is to generate 75 to 1 crore corpus in 10 years, is the investment amount enough, or he needs to step up his SIP? Anil.
Yes, so I guess there are some bit of things that he could look to change in his portfolio. One of that is, this thing between, doing an index fund or doing, a fund which is managed. And so based on that, if he wants to look at the S&P, index fund of SBI and move it to ICICI Blue Chip. Okay, the SBI Contra, we think it's done well, and that's something that one could continue. It's given a reasonably good alpha. Small cap fund, I think, we can also continue there. The other probably that change that we are saying is of Motilal Oswal Mid Cap, which he can move to HDFC Mid Cap Fund. So yes, so keeping in mind the requirement that he has, if he wants to do about 1 crore in 10 years, I don't know the current capital that he's built up in the current fund. So I will just say what is it that he requires on a monthly basis. So crore will require almost like 43.5K. So I would think that, if he's able to do more than, then he can also sort of work from there. But, this is what is required to achieve 1 crore. Now, what would depend if you need to take out what is already the value that has got created. So if you take out the value and take a future value of it, if you had given the data, then that's something we could have done. And then say, okay, instead of 43 now, it requires another 25,000 or so, and you're able to achieve your goal.
Alright, so Anil, now an exit from Motilal Oswal Mid Cap, Nippon India Small Cap and SBI S&P Index, right? Any specific reason why you are recommending an exit strategy from these three funds?
Yes, so looking at funds which are doing better right now, one of the things we've taken out from some of the index funds is there are equivalent funds which are generating a reasonably good alpha, right? So those are things which, you can actually end up looking to do. If you are a conservative investor and say, I'm okay with doing index level, and you may say that, in a, let's say, mid cap or a small cap, the index itself is growing very fast. So that is something that one could do. Yes, if you do that, then you would it will be lower cost. But keep in mind that when you are looking at the NAVs, they are after expenses, right? So if you compare them and you find it worthwhile, then you can go for a managed strategy.
Anil, that leaves him with SBI Contra and Parag Parikh Flexi Cap. Any other category fund that he should be adding?
Yeah, he's also asked for that. So if he wants to look at the multi-cap and the flexi cap type of a thing, we would suggest, let's say, the ICICI through multi-cap, which is one thing that he can invest into. And in the similar category, maybe we're suggesting right now large and mid-cap. And they'll also keep in mind, it will keep it slightly more safer compared to, say, a multi-cap. And that's something that he can also do. HDFC large and mid-cap is a fund that I would accordingly suggest.
Alright, so these are the funds that Pratik you need to add in your portfolio and also take care the diversification part of it, and you definitely need to step up your SIP as and when that's possible. We move on and we will take Ramesh's question, and is it a good idea to invest in Nifty 50 ETF, and if so, then which kind of ETF would you recommend? And that is the only question that he has. Very interesting. And investing in ETF is also catching up, because we are seeing passive investing. The trend is catching up in India among investors, and so a lot of debate or a lot of concern whether selecting index fund is better or going to an ETF is better. So first, let's just begin with understanding what's the difference between investing in a passive way, but through an index and through an ETF. Anil.
Yeah, so definitely there's this whole debate between active and passive, and sort of in developed markets which are more efficient, you will find that it's very difficult to beat the index, right? And keep in mind that actually the index is an improving one, right? Because it's not a static index. Most of the index are say market cap weighted. So whichever are the stocks which are doing well automatically come in and take a larger exposure. In fact, we've seen, let's say in the US, for example, Nvidia and stuff, I think through indices actually ended up coming in, whereas maybe through a managed portfolio, many of them missed it out. So that's the benefit of it. It's not biased. However, I think that we are still a little away from a truly efficient market in India. So you will find schemes, some of them delivering almost 5% alpha plus, over even longer term periods. So I think once we get to a more efficient market, once it's more developed, then I think it would make sense. In terms of the benefits of an ETF, and active versus passive, one of the big benefits is of doing a passive fund like an ETF is that it is low cost, right? And which is why in a country like the US where it's difficult to beat the index, then you definitely look at how do you save cost, right? So, but what could investors do at this point of time? I think you can see whether you're wanting to run for growth, and if it is something you're comfortable with active funds which have run very well, you could go for them. You could maybe slowly start adding, say, passive funds also into your portfolio. Okay, so that but as time goes by, I believe that passive funds will become more and more important for an investor and difficult to beat, and the cost savings will also make it more efficient. In terms of, I think one of the requests was what is the Nifty 50 fund that you can use. I think one versus the other, they need to deliver in line with the index, right? So in an ETF, there's not too much of a requirement of, and especially index ETF, right? Of the fund house or the fund doesn't make too much of a difference. You will look at, say, what is the tracking error in that fund, and if the tracking error is low, then you probably all funds need to deliver somewhat the similar one, because that is their mandate. In fact, if they deliver better than index, also it ends up with a higher tracking error, right? So look at any of them are okay. You can go to big names like say HDFC, all of them, and
got it.
Look at,
got it.
Yeah.
All right, so that's an in-depth explanation of how you can have a passive exposure in your portfolio via index and ETF, and also the recommendation given to Mr. Ramesh. But then we also have a viewer online with us, Mr. S.B. Sivakumar. Good evening, sir. How are you doing today?
I'm fine, ma'am.
Thank you so much for sending us your question. So, want to talk about or ask our expert about two funds, Tata Business Cycle Fund, and you would also want to know his views on Axis Long-Term Equity. You have stopped your SIP in this fund?
Yes, madam. Yes, madam. Last year itself I stopped. Okay. Last 7 years I was holding that fund, and after that I partially withdraw that amount, and the balance amount is there with Axis Long-Term Equity, madam.
Sure. So you don't need any more tax benefit, or you want an ELSS fund also, a recommendation for that?
I am having ELSS Miri Asset, madam. Miri Asset and Tata ELS I am having.
Okay. All right. So were you investing via SIP in Axis Long Term, which is why only the SIP which has completed 3 years, you have taken that money out, and the rest is still intact?
Yes, already I have taken the partial amount, and another 3 years, another 1.5 years is there to complete 3 years cycle. After that, I will take the entire amount. That's what.
Okay. All right. So let us just talk about Tata Business Cycle Fund, and you already have a tax saver in your portfolio, and once all your money comes out from Axis Long-Term Equity, then you will be free from that fund as well. So Tata Business Cycle Fund, Anil, what is this fund about? Let's just start from the basics first.
Yes, sure. So business cycle fund is a thematic fund. So it depends a lot on the fund manager where he is trying to predict what are the business cycles running on. So you may sometimes find cyclicals do well, the public sector enterprises, and so that's what basically the fund manager is trying to do and say, you know what, I think say PSCs are likely to do well, or is there a cycle in that favor. Right, or at this point of time, consumer is likely to do our autos, and this time is interest rates are high, so I will look at sectors which are less impacted. So that's basically what a business cycles fund does, and so it is trying to look at what are the cycles which are likely to emerge, and based on those cycles which are emerging, they end up investing in those sectors and have weightages towards that, right? Now, one keeps in mind that a fund like this depends a lot on the fund manager and the ability to look at business cycles, and to that extent, being a thematic one, it is important to also look at your fund manager and go through a little bit of detail around how they have managed business cycles. Right. So the Tata Business Cycle Fund is not too old a fund. Okay, and it's just under say 3 years. But if you look at a 1 year return, has been a reasonably good 27.43%. So the fund has, we think that the Tata Business Cycle, since we already is holding it, then it makes sense to sort of continue with it. Okay, if he's also looking to, there are other funds that are there, which you can use in terms of the business cycle ones. You can also evaluate those if you've not yet sort of invested into it. But I would think if it's something that's invested, then one can hold on and likely to do well. On the ELSS, basically, I'm just saying that, if to the extent that you need ELSS funds or the limit of ATC, to that extent you use it, because you'd rather use funds which are, open-ended and not restricted for you. Okay, and to that extent, it's ideally, it depends on the mix. So the idea to have, say, a couple of them. You spoke of Mire Access. I think you could probably even do a Mire and continue with that one, and since you are believing this particular fund.
All right. I would also like to come on the choice of thematic fund. I don't know Mr. Sivakumar's portfolio, but then Mr. Sivakumar, I'm assuming your portfolio is very well diversified to have a thematic fund in the portfolio. Is that right, sir?
Yes, sir. Yes, madam. Yes, absolutely, you're right.
Okay. All right. Anything else you want to ask, Anil?
Thank you, madam. Thank you for your service. Thank you.
All the best. All the best for your portfolio and the kind of changes recommended. We will take a quick break now, but then we have more viewer queries lined up via WhatsApp as well as from email ID. So do catch us in case you want to send across your question while watching our show live. You can do that. Just WhatsApp your question, or maybe you can email us also. See you after this break. Welcome back. You're watching The Money Show with me, Kavita Thapliyal, and we are giving your portfolio queries answers live, and I have with me Anil Rego today. Anil, let's move on to our next viewer, and Megha Nair is asking her question via email from Bangalore, and the fund mix that she has in the portfolio includes Parag Parikh Flexi Cap, HDFC Index Nifty 50, Motilal Oswal Large and Mid Cap, and she wants you to recommend two multi-cap or a multi-cap or a flexi cap that she can have in her portfolio, and she wants to exit HDFC Nifty 50 fund because she's not happy with the returns over there. So that's the kind of fund mix. I'm not very clear about her time horizon and investment goal or the corpus that she wants to accumulate. But then so far, looking at the fund mix, do you think it's well diversified across categories? A bit of small cap maybe, which she has an exposure to flexi cap, but then it's largely a large cap oriented flexi cap.
Yes, so it looks like a slightly conservative portfolio. So it depends on the risk profile of the investor, right? So if you can take a high level of risk, then maybe you can go back to say a small cap fund and stuff. But I think there was the request that she made that she wanted to look at either two multi-cap or flexi cap funds. So that seems to be, the conservativeness that one wants to continue to maintain. So keeping that in mind, I think one would suggest a HDFC Flexi Cap is one option. and apart from that, maybe do a Nippon India multi-cap. So these two funds is something that she can add. Apart from the HDFC index, which she's already chosen to exit. Okay, you could also see whether you want to move Motilal large and mid cap to, let's say, HDFC large and mid cap fund. And I think so that will be a moderate risk portfolio on the equity side.
So that's your recommendation coming for Megha. But then I'll move on to Rohan Mishra's question, and he is 30 years old, and after 25 years he wants 2.5 crore. That's a corpus he's decided for himself. And today he's investing in SBI Balance Advantage Fund, HDFC Multi-Asset. He's got SBI Nifty 150 Index, and these are regular schemes, and he wants you to help him achieve his financial goal. He wants to know what should be the investment amount for 2.5 crores in 25 years, and also the fund mix. So one good thing is that he's starting really early, and he definitely needs to increase the investment amount. But then talking about his portfolio mix, I think he can go a bit more aggressive, looking at 25 years time frame. Anil?
Yeah, definitely, since, when you look at someone with a 25-year time frame, age of 30 as well, yeah, I think that's something you can take a little bit of risk out there. Okay, so yes, there are conservative funds like Balance Advantage Fund. Okay, also the HDFC multi-asset is there. So both of them are hybrid or, multi-asset funds. So to that extent, it's very conservative. And the other fund that he has is a, Nifty index fund. So it makes sense to, take that little bit of higher level of risk. So you can choose to do, say, at least to start out with a multi-cap fund. And I think something like ICICI multi-cap can be a fund that one can look at. You can also look at funds like Parag Parekh, flexi cap. And I think it's also worth to take some bit of exposure to the mid and small cap. And I think the small cap, one can, end up looking at a Nippon India small cap fund and, continue to diversify across. Now, depending on your risk appetite, then, you can, say how much you want to keep between large cap, say multi or flexi cap, mid cap and small caps, okay, and have a good and well diversified portfolio. Yes, to achieve your 2.5 crores. It's good that you've started early. One doesn't have what he's already built up. So, if you've already built up a certain corpus from his investments already, then maybe he would be able to achieve that number. But otherwise, he may need to top it up by another 20,000 rupees or so.
So Rohan can actually go slightly more aggressive. Also, a lot of large cap exposure is these days coming through a passive strategy via an index fund. You think that is going to be the trend going ahead also?
Yeah, so sometimes I think the view of people is that when large caps anyway it's known, why not just choose the index, right? So that's the thought process that is there. But you have some of the funds which are done fantastically, like you said, blue chip, etc., and delivered reasonably good alpha. So I would think that at a point like this, maybe continue to balance between the two. Okay, have some bit of the ETFs, passive, etc. But I don't think you should be missing out on the active funds as well yet. As we go forward, like I said, we may find that passive funds can be difficult to beat.
All right, on that note, time to sign off and wind up this discussion today. Thank you so much, Anil, for being on the show and helping our viewers with their financial portfolio queries.